Hey guys, what's going on? My name is James Mason. In this video, I'm going to explain what MACD is and how to use it. So, MACD, what does it stand for? It stands for Moving Average Convergence Divergent Oscillator. So it's just a lot easier just to say MACD. So to start off with, I have my chart open, I have Twitter up, and this is the 1 day, 1 year chart. So you come up here to studies, edit studies, and then type in MACD. Add selected. So if you're just opening this up, this is the default and you want to keep it that way. Now, these lines right here, or not lines, these numbers right here, these are measured in time frames. So since this is a 1 day, 1 year chart, this is 12 minutes, 26, 9 minutes. Down here, I'll show you. Actually, let me add this and then I'll show you. Alright, so down here, this light blue line, it's that right there. This gold line, it's that line right there. These right here, these are just these candlesticks. It's kind of in the way, but you can see some red ones right there. And there's some tiny red ones, but they're just the green and red candlesticks. That color for that line, that's the zero line or center line. It's right there. It separates these candlesticks. And you know, this is just the positive candlesticks for right here on the MACD, and this is just for the negative, the downtrending candlesticks on the MACD. So now that you have your MACD set in, what I'm going to do to give you a better visual representation, just so you can kind of see how this stock is flowing. It makes it just a little bit easier to compare some EMA lines with the MACD. So I will add 2 EMA lines in. So this one, I'm just going to keep that the same, and this EMA, I'll change it to 20. Alright, so you added your MACD in, click apply, click OK. So the MACD actually has a lag in it, and the lag actually stops at the last closing price, and that's how it formulates to be able to tell you which way it's going to move. Now, before I go any further, I just want to explain that these lines right here are not the same as these lines. Even though the colors are similar, these are EMA lines for the chart, and these lines, they are actually EMA lines as well, but they are for the MACD. These lines right here do not show up on the chart. They only stay right here in this box with the MACD. So these EMA lines, they represent the change in price. These represent the change in momentum. So when you're looking at these lines for the MACD, this blue line, that time frame that represents is a period of 12. Since we're looking at a one-day chart or a one-day, one-year chart, this would be, it would actually move over the average for the momentum of 12 days. If this was a 1-minute chart, the average is determined by the previous 12 minutes. The same for this line right here, except this line is a period of 26. So the one-day, one-year chart, it represents the average of 26 days prior. On a 1-minute chart, 26 minutes. With this histogram, this indicates a positive momentum, and this indicates a negative momentum with the red candles here. Now, let me back out. So how this all works is when these two lines cross each other, that's when you actually have a change right here on this histogram for the MACD. As you can see right here, this blue line comes up, and when it crosses right there, it starts showing positive momentum. And then it comes up here, and as it separates between these two lines right here, these bigger green candles start to formulate. And then when they start getting closer to each other, that's when you start seeing the darker green candles. And then right here, you see a lot of distance in between those two lines, and that shows that change in price up here. Now as you get up here, these two lines cross over again, and then that turns into a negative momentum. Now, if you look right here, and then you look right here, down here on the MACD, that shows a downward trend on the MACD. But if you look up here, this price is still going up. So you can't solely rely off of one indicator like I state in other videos. It takes a series of multiple indicators to make the best decision possible on a buy and sell. So if you end up trying to base your trades just with this, you are not going to get in at a great price. And let me try to find, let me back out right here and find you an example, a better example. So we'll go to the 1-minute chart. So right over here, if you look at these prices, it goes up right there, and it drops, and it indicates it right here on the MACD, the candlesticks, and also right here with the MACD lines, they cross over. And so that does say that there is negative momentum, that this is downtrending. So if at this point you see this candlestick go shallow like this, which is saying that there's some positive momentum trying to take it over, but it's not enough yet to say it is positive momentum for it to turn into one of these green candlesticks. If you tried to completely beat this system, and you would have bought right here thinking that it would mimic something like this and make a run again like right there, what would have happened is, let's just say you bought right there and you waited just a couple minutes. Well, that soon you already lost 0.13%. And if you wait longer, that is a loss of 0.44%. And then, if you decide to wait this out, I mean, right here, it's already at the bottom for this time frame. You know, just looking back at the stock, it has already found its bottom at this point with the MACD, that it actually, you know, starts going back up, and this is the MACD's new high for this time period. And so if you decided to sell right there, you know, you still took a loss. Now, in my opinion, the best way to actually use the MACD with the least amount of risk is if you wait until you have 2 to 3 of these candlesticks that have already started showing positive momentum, which means this line crossing over this gold line. So at this point right here, if you waited until the third one before you bought, and you know, you could buy in and this could completely just reverse on you. And so that's why you have to chart your trade first and use other indicators as well. But let's just say for this moment right here, you waited until the third candlestick, and you know, right here this shows this little cross right here, which means that there is indecisiveness during this day, or this 1 minute period, sorry. So let's just say you actually bought when it was red. So you bought lower and you waited a couple candlesticks, and then you just decided to sell. If you sold right there, you're up 0.14%. If you waited a little bit longer, you know, you start seeing it, you know, downtrend again. And if you look down here, it shows there's darker green candlesticks, which now means that there is a negative, you know, a negative downward, you know, momentum that's pushing us down and trying to make it sell off. But you get lucky right here, and you know, it kind of starts going back up. So then this happens right here up on the candlesticks for the chart, and you decide to sell right there. At this point, your percentage for profit is 0.2, so 1/5% you made a profit. Another thing to take notice with when you are looking at the MACDs, when you see this negative momentum right here compared, well, these darker candlesticks compared to the lighter ones, with the lighter ones, that usually means that this has not met its bottom yet. And with these darker ones, and this is true for both the green ones, or the green ones as well, with these darker ones, you tend to find your lowest low for that price and your highest high for that price for whatever time period you're looking at. Here's actually an example. So right here, if you look at the MACD, these candlesticks, these bars get shallow. You see the price go down a little bit, but then you start seeing, the price go up again, and now right here, these are dark green bars as well, but you see a huge difference in the price now. Which brings me to my next thing to talk about, divergence. So you have convergence and divergence. Divergence means to separate, convergence means to come together. So let me zoom out a little bit. So let's start with a bearish divergence. Let's back out to the 1 day, 1 year chart. So a bearish divergence is when a stock, the actual price of the stock, creates a higher high. So right there to there. And if you look at that price difference from where it started, it was at $21.69, and that final price, $22.43. Now for the MACD, it actually forms a lower high. So let me zoom in. So what I mean by a lower high is, if you're looking at this positive momentum on the MACD, it gets right here, and compare it to the price right here is lower than the price right here. On the MACD line, these MACD candlesticks are higher right here compared to right here. So that's what that means when on the MACD line it is said that it is, or when you hear of a bearish divergence. So up here again, with a bearish divergence, you'll have a higher high and a lower high. So even though these candlesticks are lower than these, the price still went up. So don't get confused when you hear a bearish divergence with a bearish downward pattern. When someone's just using the term bearish, that does mean downward trend. Now, like I said in the beginning of the video, divergence means to separate. So with a bearish divergence, that means to separate, to get away from the bearish pattern. And when you're getting away from that bearish pattern, that means you are moving up. So next, let's talk about a bullish divergence. And we are going to jump over to Tesla. And I'm going to change my chart. Let's see. All right. So with a bullish divergence, what that means is when the actual stock itself creates a lower low in price, so lower low. So at this point, this was the lowest price, so that's the low there. But then over time, this is the lower low now. But with the MACD, it actually creates a higher low, meaning these candlesticks are a lot higher, even though they're pointing downwards. They are a lot higher at this low point than compared to this low point in price to right here. So with a bullish divergence, that means this is actually in a downward trend. So this is MACD and how to use it. It's a great tool, but used solely by itself, and if you don't know how to use it, you could get turned upside down quickly on it. But pairing it with other indicators, it is such a valuable tool that, I mean, it makes all the difference in your trades, in my opinion. I love MACD. But so that concludes this video. If you like this video, please subscribe to my page. Please give it a thumbs up, and I will see you in the next one.